money supply expanding over the long term, Bitcoin will follow that. It may not follow it week to week or even month to month, certainly not day to day, but it will follow it long term. And so if you just pull back and you just eliminate all the noise and you hear nothing else from this conversation but this, just remember that as Larry said, central banks are trapped. Sovereigns are trapped. They have no choice. We have so much debt. We have so much leverage in the world that we have no choice but to build on that leverage, expand on that leverage, expand on the money supply in order to keep the charade going. And Bitcoin will ultimately benefit from that even more than gold.
Year's not over. And I'll say it here first. I think we'll see six figures this year. This calendar year, you easily get to high 80s, low 90s, and they'll overshoot probably into the 100,000 range. So
you guys are feeling bullish.
Oh, absolutely. It's just relax. It's all coming our way.
Just this last week, we bounced right off that flag. I mean, it's just incredible. We bounced right off of it. And It's like a self-fulfilling prophecy that traders look at this and they watch this and they say, okay, it's not quite ready yet. And so now here we are this week, starting today, we're down, But once it breaks through this level, which is about 66,000, then the next level is the all-time high.
Lavish stresses that despite the short-term turbulence, Bitcoin's long-term trajectory is tied to broader economic trends. He references a study featured in Bloomberg, which notes that Bitcoin is highly correlated with long-term liquidity growth. As global money supply expands, Bitcoin tends to follow suit, even if it doesn't react on a week-to-week or month-to-month basis. Lavish advises listeners to zoom out and tune out the noise. Central banks and sovereign governments are trapped by the immense levels of debt they've accrued, leaving them with no choice but to continue expanding the money supply to sustain economic activity. In such a scenario, Bitcoin, with its limited supply, stands to benefit more than traditional assets like gold. Lawrence Lepard predicts that by the end of the calendar year, we could see Bitcoin reach six-figure territory. This optimistic forecast stems from technical analysis, specifically a bull flag pattern that has been forming for months. According to Lepard, once Bitcoin breaks through the $66,000 level, it will quickly surge past its all-time high of around $72,000, potentially reaching $100,000. This upward movement will likely be fueled by a combination of market psychology and technical factors as traders watch for key resistance levels to be breached.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Great uncertainty is not great for markets. Markets hate uncertainty. And so with Bitcoin, you're definitely sensing some uncertainty here. With, we saw the Nikkei was down almost 5% last night. It's like, are we going to have another, yen carry trade issue, or is liquidity actually being drawn out? Are we actually heading into a recession that we're going to have to stomach first? There's a ton of trading capital in Bitcoin, and they're moving around this thing, and it's not that big yet. So $1 trillion asset is nothing. It's a fraction of a percent of the total investable assets in the world. When you have $900 trillion of investable assets in the world, and you've got an asset that's less than $1 trillion, yeah, it's going to get whipped around, especially when it's been the tip of the risk spear for so long. So that's one thing, but long term, and the reality is, and Sam did a great job with Lynn Alden on this, and in studying this, and it was in Bloomberg actually this weekend. They quoted the study that Bitcoin is highly correlated to the long term growth and liquidity, and so when you have money supply expanding over the long term, Bitcoin will follow that. It may not follow it week to week or even month to month, certainly not day to day, but it will follow it long term. And so if you just pull back and you just eliminate all the noise and you hear nothing else from this conversation but this, just remember that as Larry said, central banks are trapped. Sovereigns are trapped. They have no choice. We have so much debt. We have so much leverage in the world that we have no choice but to build on that leverage, expand on that leverage, expand on the money supply in order to keep the charade going. And Bitcoin will ultimately benefit from that even more than gold.
The year's not over. And I'll say it here first. I think we'll see six figures this year. This calendar year. Yeah. And I think James would agree with us because he does a lot of good technical analysis. If you look at it, there's a bull flag forming with a downward slope. And what is it, James? 73?
Yeah, it's been forming for months now.
Right. And when it breaks 73, it's going to squirt to 100 like lickety split, don't you think?
Yeah. So if you pull up that flag, that's about right. And it's, once it gets through that $70,000 level, it's going to have, like right now, where the flag, the trajectory of it is about 66,000. If it breaks through there, it's kind of interesting here. All right, can you all see this?
Yeah.
All right, so this has been a bull flag that's been forming for months here. Okay, this is the daily. So if you go to the weekly, it's easier to see. But this has been forming for this long. Here's the flagpole right here. After we had the ETFs approved and we had that sell off, which was a fake out, you had this flagpole created, and now you have lower highs and lower lows that continue as you consolidate through here, right? So now, as we keep consolidating, you could see just this last week, we bounced right off that flag. I mean, it's just incredible. We bounced right off of it. And it's like a self-fulfilling prophecy that traders look at this and they watch this and they say, okay, it's not quite ready yet. And so now here we are this week, starting today, we're down, But once it breaks through this level, which is about 66,000, then the next level is the all-time high. And that all-time high is what, 72 and change?
73-ish, yeah.
Yeah, 73,000. So once it breaks through that, then it's price discovery, and that's it. And you're kind of off to the
flags typically fly at half mass. So you add another 20 points, 24 points to that, and you easily get to, 80, high 80s, low 90s, and it'll overshoot probably into the 100,000 range. So
you guys are feeling bullish.
Oh, absolutely. It's just relax. It's all coming our way. And I mean, and this is without something, without an accident, without something, quote unquote, breaking. I mean, I think there's a high probability that sometime in the next 18 months, something serious will break, like the stock market or whatever. And, the bazookas will come out.
Yeah, I mean, it happened back in 2019. We've talked about it before with the, the repo spike. Well, the repo spike. I mean, it was just, you look back at it now, it's obvious, of course, it's quarter end. You've got, the window dressing. You've got banks, hoarding capital or hoarding cash. You've got, the expansion of the amount of debt that the Treasury wanted to float. And then you've got the dollar issue overseas and international investors not able to buy as well. It was just a confluence of events. Was it a black swan? No, but it was kind of grayish, and it was painful. And then boom, the Fed just came right in with QE. You can see on the chart of the expansion of the money supply. It started back in 2019 in that fall.
Right.
Lawrence Lepard analysis broadens to a more global perspective, examining how countries outside the U.S. are reacting to the dollar's instability. The BRICS nations, Brazil, Russia, India, China, and South Africa, have started moving away from the U.S. dollar and other Western fiat currencies, preferring to store their wealth in more stable, neutral reserve assets like gold. Lepard notes that the recent rise in gold prices is largely driven by these countries seeking alternatives to fiat currencies. Despite this shift, Lepard believes that gold remains significantly undervalued, especially when considering historical standards for gold backing.
Yeah, I mean, I think they'll keep cutting rates. They'll try and keep things going. They'll try and keep the market up. And, it's like they've got the plates spinning and they can keep them spinning as long as possible. But, I mean, this is where I really think David Hunter is brilliant on this. I kind of share his view that at some point a plate is going to drop. They're going to be too many things, and that'll lead to the market rolling over, stock market, And that's a big negative liquidity event, right? A lot of, money goes to money heaven when the stock market goes down 40%. Everybody feels like they're not as rich. The economy starts to slow. People start to, do layoffs. And just, one thing leads to another. And initially the impulse will be what's going on right now, which is you buy the shorter term bonds because you get a decent yield. But as even James pointed out recently, the long bond has actually been going up. And James has done much more forensics on this. But I think what he's discovered is that the demand the reason we've got so much short-term debt is there's no demand for the long-term debt. The suckers at the card table are the people who hold long-term U.S. government debt, knowing it's going to be debased. And guess what? The suckers are getting up and they're walking away from the table. They're like, hey, I'm not going to do this anymore. Yeah, and so, and this, by the way, this is the exact same pattern that happens with emerging economies that go into debt crises. They get to the point where they have to fund all of their debt short term because nobody with half a brain would ever own the long-term debt of a country that's broken and out of control. And that's where we're going. And what people don't see is they think, well, this is the world's reserve currency. We got the biggest military, as Joe Biden says. This is the United States of America. Well, guess what? You follow the same stupid policies that everybody else in these emerging countries has followed for the last 100 years. You're going to get the same results. Your currency is going to go to zero. All countries are running with fiat currency, and so they all have the same problem. And the Chinese made the mistake of kind of emulating us in terms of debt-based growth. They're not particularly popular, but what I will say is that a couple of the BRICS countries, have kind of seen the other side of this and said, oh, you know what? We prefer to save our money in neutral reserve assets. And that's part of why gold is going up. Gold is going up on decreasing ETF demand. This isn't U.S. investors buying gold, except at Costco, which is doing record gold sales. This is the BRICS saying, you know what, we can't store our wealth in fiat Western currencies anymore. The yen's no good, the dollar's no good, the euro's no good. We're going to trade between ourselves using our own currencies, and to the degree there's an imbalance, we're going to net settle in gold. And this is why, people don't understand this. Gold is not priced in the right zip code. If not even close. I stole that from Luke Groman. Not even close. If we were to go to a full backing of the gold that we have, assuming we have the gold which we say we have, which I don't think we do, but if we were to go to a full backing, the math is such that the way we were in 71, pre breaking the standard, gold would have to be at $80,000 an ounce. Gold's at $2,700 an ounce, $2,600 an ounce. Yeah. That's a big difference. That's a lot of zip codes from here to there. So. And so what we're seeing is something that, and this is why history books are what people have to read if they're thinking about investing. We're seeing something that has not happened in 100 years. Mm-hmm. Last time this happened was after World War I, where a ton of sovereign currencies got all messed up because everybody, spent way too much money fighting a stupid and pointless war. Kind of similar to what we did in the Middle East, by the way.
Lavish draws a historical parallel to the aftermath of World War I, when sovereign currencies were similarly destabilized by excessive wartime spending. Much like the reckless fiscal policies of that era, today's governments are burdened by enormous debts and ongoing deficits. Lavish criticizes the U.S. for following the same failed policies as other nations, warning that even the world's reserve currency, the U.S. dollar, is not immune to the consequences of poor fiscal management. Over time, this could lead to the dollar's decline and the further rise of assets like Bitcoin and gold.
Please like and subscribe my channel.